Hey traders, it's Ryan with Stock Investing and Trading 101. Today I'm going to be doing a Robinhood portfolio update and talking about how I made 9% this past week, comparing that to a S&P 500, which is up just 3%, 3.5% on the S&P 500. So we're pretty much nearly tripling the performance of these indices here, doubling the NASDAQ performance. So the market has been extremely volatile. We've seen um, multiple days in a row. I think it was 7 or 8 red days in the market, and it got to an oversold condition, in my opinion. So I've been kind of restructuring my portfolio. I've been using a little bit of leverage to add to my positions on the downturn, and it's paying off now that we're seeing a upwards movement on Friday and again today, a pretty significant upward move. We have the S&P 500 up 1.4% today, and the NASDAQ up about nearly 3% today. So the NASDAQ is outperforming today. My portfolio has been aggressively investing into tech stocks, mainly FANG and the NASDAQ as a whole. I've also been making my biggest position in the S&P 500, so I'm trying to use the indexes during this turbulent period. It usually has a little bit less volatility than investing in specific sectors. Plus, I'm highly invested in technology, so I want to diversify. Although the S&P 500, the biggest positions are technology companies, it also is into financials and energy and consumer staples and pretty much all of the sectors. So my positions are organized from biggest position down to pretty much the top 10 or so biggest positions are at top, and then the smaller ones are below that. So the equity in each position, we have over $5,000 in the SPY. After that, we have Microsoft. We have about 5 shares of Microsoft for about $1,500, which I've kind of trimmed my position. I had about $3,000 invested, and I'm just reducing my leverage due to markets not being so oversold currently. We have about $1,000 of Google, which again I trimmed slightly. 3,000 in Amazon, 2,600 in the Nasdaq, 1,900 in Target, Nvidia, 1,800 in Disney and Adobe, and 1,700 in Shopify and PayPal. After that, I have some kind of small positions in McDonald's, United Healthcare, Lowe's, Caesar's Palace, Best Buy, CrowdStrike, eBay, Netflix, Etsy, pretty much all of the positions on the bottom half of this stock list. Pretty much minor positions. They aren't really even that important, so I'm just going to kind of scroll through them. And then I have some small hedge positions in the SQQQ and the UVXY, which is pretty much short-term volatility and shorting of the NASDAQ, so short technology hedges. And then some kind of medium positions in my portfolio, just some kind of stable. I've tried to put these positions kind of more growth instead of, or just kind of more value or dividend plays instead of like the high growth technology. So we have stuff like Starbucks, American Water, Home Depot, AMD, Facebook, which I had trimmed a little bit of my position. SoFi, which is kind of my speculative play in the portfolio. It's one of the only companies that's, kind of a newer company, and it doesn't really have a big history of earnings and a sense of direction with it. But I do think it's a good value, and I do have calls on it as well going into 2023. I also have Charter, Sony, which is having a great day. They're acquiring another company. Stock went up about 4 or 5% today. Costco, Restoration Hardware, which is one of my worst performing stocks. Norfolk Southern, which is a railroad company. And that's pretty much my portfolio. I'm kind of overweight in the indices and technology. I have good, solid positions in some stable dividend-paying companies or dividend growth companies. And then I have some just smaller positions in some speculative plays or some other very solid companies but just kind of smaller filler positions, more or less. So that's where I'm at with my portfolio, guys. With the market having a good move upwards today after, multiple volatile weeks, I am expecting this rally may continue for, another couple of days or so, but I am going to start reducing my leverage and hedging and just kind of preparing for more volatility because luckily I was able to get out and it paid off for me buying the dip, but I was a little bit aggressive with my dip buying, and I just want to make sure that if this is something more serious than just a small 10% pullback, that I'm prepared for it and it's not going to hurt me too badly. So just rather be safe than sorry, and always preparing for the unexpected, I suppose. So thanks for watching the video, guys. We're having a great week despite the volatile markets. Another great day, up $1,300. As always, guys, thanks for watching the video. Don't forget to smash that like button, subscribe to the channel if you haven't already. Drop a comment, let me know how you're doing in this market, what you're positioning, what you're buying, what you're selling, and we'll talk to you guys soon. Thanks for watching.